That's a civilian. And I'm worth $250,000 times 5. That's 1.25 on the Lone Star Drive.
Welcome back to the $100,000 to $1 million public account challenge. It was an interesting week. I was warning everybody in the last episode, we're coming into Q2 earnings. This is super indecisive times. The market doesn't know whether to be bullish or whether to be bearish going into earnings. One thing that really set the tempo, and it's the first thing that we'll go into today, was the Google earnings. So if you didn't notice, Google absolutely smashed earnings. Their expected EPS was just under $3. They came in at $9, and they got absolutely smashed because of it. And the big reasoning was a lot of their EPS came from money that was grossed from the SpaceX IPO because they were a big shareholder of SpaceX. So that was news to me. I had no idea. But I saw the numbers come across on CNBC, and I'm like, Google just beat earnings by 300%. They got to be soaring through the roof, and it just absolutely plummeted. And that goes to show you that how fast the algorithms are all over things like that. Like any small portion of a report that can lead to a bad outlook can automatically dump a stock. But they did have their cloud services grew like 20% year over year, which is absolutely huge. So ultimately, I'm really bullish on Google, and I wanted to take a position in Google for the longest time. We talked about another stock that we're going to get into next, and how I thought it has a very similar story to Google, and that, like I said, everybody thought Google was dead when ChatGPT first came out. Like, they plummeted. Everyone's like, oh, everyone's going to go to ChatGPT with their stupid questions. And this is right around April 2025. And then look, over, a year's time, it was one of the craziest bull runs I've ever seen, over double in 1 year's time. And I sat there watching it like, oh my God, like Google's up 12% today. Oh my God, Google's up another 5 today. And so there's another stock next we're going to get into that I think has a very similar story. But when you see Google beat earnings by 300%, grow cloud services 20% year over year, and then they get absolutely murdered going into earnings, money in the bank is money in the bank. Whether it was the SpaceX IPO or they made a bunch of money clubbing baby seals to death, the numbers speak for themselves. For me, that's kind of a bullish outlook, especially when they're putting so much money into building out these data centers. They did increase their CapEx by about $10 billion going into 2027, which at that point, with the money that Meta and Google and Microsoft is spending in cloud services, that's like a $2 tip after a $150 dinner. That's really not a big number. It's just like, I think investors are kind of bracing, saying like, how much more money do we need to spend before we can finally get some ROI on this investment? And that's fair game. That's definitely fair game. So the next stock we're going to get into, Adobe. So I saw this in the last video. Adobe has kind of gotten killed in this little AI race. As you can see, they're just plummeting, And the thing is that Adobe is a cash flow machine, right? And this is a stock that I buy in and out of. So you're going to see like a lot of, let me see if I can move here. So yeah, it says I have one share. So it's a stock that I kind of ride a wave, get off, ride a wave, get off. Because like I said, a lot of these stocks that are in this transitory period go through a 2-year period, before they really start to take off. So dead money is a bad thing, and that's why I get in and out. And you might miss some gains along the way, but it's a harvesting game. It's like, okay, I need to pull some profits, let it pull back. And so right now I am out of Adobe for the current moment, but it's because I sold it down on Friday, I believe. We made some nice money off of it. It had a bull run, and that's the thing. These stocks that are highly undervalued, people know they're undervalued. And I don't think I'm going to pull up the SPY real quick, just so we can talk about that next. But Adobe, in my mind, is the next Google, because everyone thought Google was dead when ChatGPT came out. Everyone thinks Adobe is dead because ChatGPT is so good and Claude is so good at photoshopping, photo editing. And I don't know if that's the case. And if you were to talk to, say, someone who went to school for graphic design, and they'd say, you'd ask them their opinion. What do you think on ChatGPT? And it's like, it spits out stuff, but it's just kind of slop. Like everyone's kind of looking at this like this is AI slop. So Adobe is still a they have a very powerful machine that is turning over profits. I mean, if you come down here, I mean, their fair values at 380. They've met earnings expectations. They're growing their year after year at a strong percentage, and they've got a 13 PE. Okay, a growth company below 20, especially one like Adobe, being in the tech sector, that's a very low PE. That's like PayPal level PE. Like there's not much could go wrong and highly impact the stock in a downward direction, right? Like it's what are they gonna get to a PE of 7? Like that's unheard of. You're basically 7 years earnings pay for all outstanding shares. That's insane. And the big thing I stressed is that I wanted to go over the tactics that I use. So I'm not telling you what stocks to buy. I'm telling you what to look for, because there's a million stocks that probably have a similar story, and it could be in different sectors. Each sector has its own fair value PE, right? Like tech is usually in the mid 20s, high 20s. The S&P is usually right around 23 to 28, depending on how bullish or bearish it's getting. So being a tech company, their PE is about half of what most healthy tech companies are running at. So that means this company could double and it would still be a very healthy price premium that you're paying for the share. So 13 is a very low PE, especially with somebody who's really turning profits like Adobe. I haven't seen any bearish fair values coming out, like the Peter Lynch fair value, the Morningstar. There's a bunch of them. I've never seen one that makes a bear case on Adobe, and it could be the fact that maybe Adobe is just going to die and fizzle out, and it'll eventually go bankrupt. Or I don't think that's the case though. I think, say they integrate AI and they get to a 7 PE or something like this. Do you think Claude or ChatGPT wouldn't step in and say, hey, we're going to buy Adobe for its Photoshop capabilities because Adobe has better tools than we have? I think that's the case. And so I'm very bullish on Adobe. That doesn't mean that I park my money there and wait and hope. But I do definitely get in and out of it. And we can see I'm constantly in and out of the stock. If you see, I mean, this is my order book on it. So I have owned tens of thousands of dollars of Adobe over the past 2 years' time. So next I'm getting into SoFi. SoFi has earnings coming up on the 29th pre-market. So a lot of the smaller stocks I've noticed do pre-market earnings, and there's nothing wrong with that. It can get a little dicey though, because you think about, like, you're getting the earnings report, then the bell rings, then trading is open, right? So at least like when Amazon or Meta or Microsoft, they're all after the bell. So the market closes, if it closes at 4, then the aftermarket hours usually close at 8. So it's, at least it can kind of tamp down a bad report a little bit, so you can have some time to finagle. But a pre-market earnings call it can definitely get dicey. But this stock, it's looking dangerous going into earnings. And you know what that means? This means that Wall Street has a bearish outlook on this earnings report. They're anticipating that this earnings report does detrimental things to SoFi stock. So last quarter, SoFi had a great earnings report, an amazing earnings report. They didn't raise their guidance. Okay, your guidance could say, so this is how they do this. So if you go and you look at expected return earnings, so they're estimated as $1.11. That's based on the projections, the guidance of last quarter. So they almost set their own benchmark. They say this is what we expect. They didn't raise that number from the previous earnings report when they set it. So, which is usually a no big deal. And a lot of times in normal times, that's okay, who cares? That tanked the stock, because if you have earnings reports coming from Micron, from SanDisk, from Nvidia, that are just blockbuster, guidance going through the roof, You know, CapEx is tame. You know, because if somebody like Nvidia, it's like if you're or Micron or SanDisk, if your revenue is just absolutely through the roof, and your margins are good, CapEx is justified. A lot of these companies really aren't justifying their capital expenditure yet because those profits aren't rolling in. So the fact that they didn't raise, oh, I'm in the way. The fact that they didn't raise this number here in the last quarter caused this stock to tank, right? And it was, I remember watching it being like, calling all my investor buddies saying, hey, what's going on with SoFi? Because you can see it was perched up 29, 30. This is a growth company. Again, it's got a PE of 39, but in this market, when you are talking about a $21 billion company, that's honestly very small. You know, this to me is a $1 trillion company in the future, especially with people moving away from brick and mortar banks, using, and that's not like Robinhood. If Robinhood stock wasn't so dependent on the price of Bitcoin, that would be a great stock. But it follows these meme coin trends. A 39 PE for a company that is probably 1/10 of its potential. There's a lot of growth there. You're going to pay a little premium to buy the stock. Okay, so this is in my mind is completely justified to buy into SoFi at a 39 PE. But you can see, I mean, it's up in the 30s, and they report earnings and just get absolutely clobbered down here. Which I was not a buyer of SoFi in this range. I always looked at SoFi like the one that got away. Like, I wish I would have got in, you know, because I watched it way back here go from $7, you know, all the way up to $30. And I had buddies that were in it, and I'd be like, dang, I really wish I would have bought in the SoFi. But this is what happens. You get, you know, lured into things like that. You end up buying up here, you know, in this range, and then you're like, oh, now I got to wait another 3 years before I could sell anything, and my money's locked up. I think SoFi right now is a bargain. I do. And I think that earnings are going to be a little dicey. As you can see, I have a pretty decent position in this, you know, just under 40,000. I've had a lot more at certain points. At certain points, I've owned 6 figures of SoFi stock. I wasn't sleeping very well when I did, but I did. At one point, I had 6 figures of just SoFi stock. So you got to remember, this account was cut down dramatically to make this challenge a thing, okay? Or challenge this series. So at one point, I had big bets on SoFi, and we made good money doing it. If you come back to this, look at this. If you look at my buy-sell history on this, you know, just thousands. Look at, you know, 29,000, 30,000, 40,000, 44,000, 30,000. You know, just constantly buying in and out of it. Let's see. Yeah, you can see I have a long history with SoFi, and so that's why I'll hold. Even when I sell out of SoFi, I'll hold some shares just to keep tracking it. So next stock, Meta. Meta is another stock that has earnings this week, and it could go either way. It could definitely go either way because of the CapEx spend. Meta, I was lucky enough to hold it for Q4 earnings that happened in Q1 of this year. So it was in, I think February, I think it was. And that was basically this crazy spike here up into February. It was like here, and I held it through like this, right? It was like a 20% run. And I had a big bet on it at the time. It was like, 60-something thousand. So as you can see right now, I still have a decent amount here. We did trim it though, because if you remember the last video, I think I had somewhere around $80,000 of Meta. So I did trim it back before it dipped down. So, those were for some really nice gains. And the reason I did that was because I was pulling profits out, anticipating a potential crappy earnings report. So if you take a look here, Meta's another stock where I have had 6-figure positions at one point in time. Sometimes well over 6 figures, $130,000, $140,000 in Meta stock, and it can be a volatile stock, but ultimately I'm super bullish on it overall. So as you can see here, I have one more stock to get into, and we're going to talk about this because if you remember the last video, we were at about 110,000. And you're probably thinking, hey, we're going the wrong way. I totally agree. Look, we skidded off the bottom. I was watching this like the challenge. I might have to put some more money in this account for this challenge to exist. We're going to get down into sub 6 figures. So we cut it really close there. But if you look here at this buy power, I've got 20,000 in buy power. And this is the way you have to look at it as an investor. Share price is in the net value of your assets is going to go up and down. You only make and lose money when you sell. That's it. That's it. So my meta came back down from 680 down to 605. So no matter what, if you're a shareholder in Meta, it's going to decrease. But if you look at this, I mean, and this is going to totally mess up my camera, my cheap camera. $3,300 of shaved profit this week, right? So if you look at, I'll take you into my month, and we're still at, let's see, I can still show you here. Past month, we made 25 G's this month. Okay? And that's shaved profit for the most part. You know, so that's a good month. That's a good month. If you look at this playbook that I laid out last time, the stocks haven't done anything. They're nothing but lower than they were a month's time ago. So how did we make $24,000 when these stocks did nothing? It's because the resistance and the support. Okay? So, and those are two terms I'll get into because I did promise people that I would spend a little time. So there's the resistance points. So if you could say when a stock gets to this point, it has a really hard time breaking this threshold. And that's something that you're going to have to get comfortable with. It's something I'm not an expert on, right? But so for me, it's like Meta's resistance right now is at 700. So it gets up to 680. It's getting up at that resistance point. I'm going to sell some down, and it has a lot of support right around 600. You know, so then I'm starting to buy back in. You know, 600, 590. That's a big support from Meta. This can all change with that earnings report. So it could go to 350 after this earnings report. I hope that's not the case because I'm going to definitely hold some Meta through earnings. Same with Microsoft, and that we're going to talk about that right now as well. Look at Microsoft. What is it? Still a dead duck, baby. Still a dead duck, and it's our biggest position in the portfolio. We've got $89,000 in Microsoft, and this is because Microsoft ran up to 460 not that long ago. Let's see. Boom, 460, June 1st. And everyone was selling it. And I said, oh, no, I'm not going to sell it. Because Microsoft is so due for a generational bull run. It's not even funny. These guys will run to 650, 700. Same with Meta. Meta, to me, is a $1,500 fair value. That Meta is a cash flow machine. Look at what I just got. I just got these bad boys. The Meta Ray-Bans. They're doing crazy stuff. And they justify all their numbers, right? Look at this. I could be recording you. I could not be. Okay? I could be listening to music, maybe not. Could be, could not be. Anyway, Meta's another stock that when they hit that perch, just like Google, they're going to go. And so that's why I held my Microsoft. And looking back, I wish I would have trimmed it. I'm not always right. You know, I wish I would have trimmed it down and, bought back in. But hey, that's the price that you pay. You can't always harvest every dollar. Ultimately, we did an effective job. You know, we made $24,000 this month in this account. So if you over double that, that means that's like a $50 to $65,000 month. I'd have to see if I put all the money back in. That's a damn good month. Okay, especially we're not trading with millions. We will be in this account. By 2032, we will be trading with millions. But in this account for now, we're not trading with millions. To have a $50,000 month is pretty crazy. Okay, Amazon, remember in the last video, I said either Amazon goes down or their EPS goes up. I'd really love to buy into Amazon. Amazon's got earnings coming up. Okay, we might be back in. I would love to be. Amazon's my favorite stock I've ever been a part of. They're at a 29 PE. So we'll see after this earnings report whether their PE goes up or down. Because you got to remember, PE is based on earnings. So if their earnings go up, you know, and their share price were to stay relatively the same, then their PE ratio would drop because it's price to earnings ratio. So your price is your share price, your earnings, bam. So I trust me, I would love to buy back into Amazon. And so July 30th, we have a huge week in terms of earnings. And so, as you can see, I mean, we really got close to getting to sub 100,000, but ultimately, in my eyes and in investors' eyes, we made money. We scalped out profit, and look, we have $19,000 of buy power, and probably more headed into earnings because I'll sell off some stuff. So say Meta gets rocked. Say Microsoft gets rocked. We have some cash position to be able to capitalize on that weaker share value. And so I'm really intrigued to see how this goes. And I wanted to go over the SPY really quick, okay? Because look at the SPY this week. Flat. Okay. When you hear the term something is trading sideways, that means like look at this. Like it really did nothing. It really did nothing. I mean, we got it's down 0.67%. That's basically nothing. So if you hear something trade sideways, it means you didn't make anything, you didn't lose anything. It's just if you have time on your x-axis and money on your y-axis, it's just dead money. So it traded sideways, and what you'll see is that with this playbook right here, with this group of stocks will rise. And that doesn't necessarily mean these index funds will follow it, because the index funds are so heavily weighted right now with memory chip stocks, with data stocks. Nvidia's 8% of the S&P. So, like I said, there's only so much capital that enters the market at a given interval, right? And when Nvidia, Micron, SanDisk is hogging all of it, it's like having one pail of water and having to water your garden. Picture that pail of water is all the money that will enter the stock market in a given week. You either water Micron and SanDisk, these giant trees, or you spread it out amongst the smaller cap companies. And to say that is crazy. To call Meta, Microsoft, and Google and smaller cap companies is insane. These were the 1, 2, and 3 at one point. So you're going to see that index funds will be sideways, so flat, meaning because these relatively medium cap stocks, which are actually mega caps, will be going up, but SanDisk, Micron, those will all tame back down. So ultimately, you got like the index is a compilation of a ton of different stocks. So if one goes down, one goes up, it stays flat. So my prediction for the S&P is that the S&P for the next year to a year and a half, unless there's something crazy that happens, will be relatively sideways. So not much going on, and Microsoft, Amazon, Meta, Adobe, Broadcom, ServiceNow, those will be the winners of this next year, just based on the outlook that we're seeing. So this video has gone a little long, so thank you for coming. Make sure that you subscribe. This is just episode 2. And I'm hoping that we don't get below 6 figs. If we do, I think that would be fair, that I add some money just to stay at this 100,000. So we'll see how it goes. Stay tuned. We're going to get this to $1 million. And thank you for watching. Drop your comments. Let me know what you see, what you're thinking for earnings season. And see you in the next video.